The Russian military's progress over the past 2 weeks has been far slower than many analysts expected, and they have yet to take control of Ukraine's capital city, Kiev. However, regardless of how the military situation unfolds, Putin is facing a much bigger problem in his backyard: the Russian economy. The sanctions imposed on Russia by the US and its European allies are the harshest ever imposed against a major economic power. The sanctions are so strong that they were described as an all-out economic and financial war by Bruno Le Maire, the French economic minister. And to be fair, the comment is very frank and potentially provocative. Russia's largest bank, Sberbank, is already facing the wrath of sanctions. In this video, we are going to talk about the chances of Sberbank collapsing and what that would mean for the world. Could this lead to a global financial crisis? Watch this video until the end to find out. Also, if you enjoy business content, consider subscribing or liking the video. I spend a lot of time researching these stories, and only a small percentage of my viewers are subscribed. It's free, and you can always change your mind. So, the sanctions target Russia's financial system, the wealth of powerful individuals, and Russian fossil fuels. All these measures are designed to punish Vladimir Putin and the oligarchs and to cripple the Russian economy. Sanctions make conducting normal business in Russia impossible. A host of large global corporations have also voluntarily severed business ties with Russia. There is no legal necessity for them to cut out their Russian counterparts, but executives have calculated that continuing to do business in the country is not worth the reputational damage or operational hassle. For instance, MasterCard and Visa have stopped Russian operations. Maersk, the global shipping giant, has suspended Russian bookings. ExxonMobil said that it is pulling out of a big oil and gas project in Russia and will make no new investments in the country. BP is abandoning its almost 20% stake in Rosneft at an expected loss of $25 billion. And Shell is cutting its ties to Gazprom, though it has purchased Russian oil on the open market recently. The Russian currency ruble has already lost almost a third of its value compared to the US dollar, despite their best efforts to restrict the selling of the currency. Since the invasion started, the Russian stock market has lost more than 35% of its value as investors rapidly tried to reduce exposure to the country. The situation has deteriorated to the point where the Moscow Stock Exchange has suspended all stock trading since February 25th, with no indication of when it will restart. It's never a good sign when an exchange has to shut down trading for several days. Because of the bottled-up selling pressure, the market almost invariably drops far lower than its previous closing price when trading resumes. While Russia has the ability to stop trading on its domestic exchange, it does not have the power to halt the trading of Russian assets on international exchanges. The ERUS ETF is traded on the New York Stock Exchange and holds 31% of the largest Russian companies since the Moscow exchange was halted. The ERUS has dropped by another 70%. Once trading is authorized again in Russia, we should expect a similar drop, and for some individual equities, the drops have been even larger. And Sberbank has been the biggest victim of the sanctions, and it is on the brink of collapse. Sberbank's depository receipts in London have lost their entire value, falling to $0. It's hard to quantify how disastrous this could be for Russia's economy. Sberbank is Russia's largest bank, with accounts held by 2 out of every 3 businesses. Their $500 billion assets are worth about 1/3 of Russia's annual GDP. If Sberbank closes, the country might face a calamity even worse than the 2008-level disaster, because Sberbank plays a much larger role in the Russian economy than Lehman Brothers ever did in the US economy. Sberbank stretches back all the way to the 1800s and was used by the communist government to run payroll and other services during the Soviet era. It was restructured as a profit-making corporation after the collapse of the Soviet Union, but the Russian government still owns a majority equity stake. It is by far the largest bank in Russia, with tens of thousands of branches and about 300,000 employees. It operates in the same way as any other bank, taking deposits from customers and lending the money out at a higher interest rate to individuals and businesses. Sberbank is a very big part of the Russian economy, and they control a third of all banking assets. Sberbank is also Russia's greatest credit card provider, with a market share of over 60%, and the bank and the government have always had a good working relationship. The current CEO, Herman Gref, was Russia's former economy minister and a close ally of Vladimir Putin. Because of their close ties to the Putin government and their structural importance in the Russian economy, Sberbank has been a target for Western sanctions for a long time. After Russia's takeover of Crimea, the Obama administration and the European Union imposed economic sanctions on Sberbank. Sberbank's capacity to access US financial markets for funding was severely limited because of the sanctions. However, these sanctions had very little effect. Sberbank does almost no business in the US, and most of its capital comes from domestic Russian depositors. Its stock price dropped by nearly 40%, but by 2016 it had fully recovered and was setting new all-time highs. Sberbank's business has been very profitable in the past few years. Sberbank decided to reinvest their profits in new industries, creating a digital ecosystem of both financial and non-financial products, including a video streaming service called Oko, a Spotify-like product called Superzvuk, a food delivery service called Sbermarket, and a ride-hailing service called City Mobile. Basically, Sberbank became Russia's Amazon. Sberbank was transforming into not only Russia's largest bank, but also a cutting-edge technology conglomerate ready to lead the country's digital transformation. Everything was going well for the company, and its stock price had nearly doubled by the time it peaked in October of 2021. They had a market worth of almost $80 billion, making them one of Russia's most valuable companies. However, when Russia invaded Ukraine, the United States and the European Union responded by announcing the most severe set of economic sanctions in modern history. The most significant of these is the banning of Sberbank and other Russian banks from the SWIFT international payment system. Sberbank will find it extremely difficult to arrange cross-border transactions on behalf of its clients. It's also unclear how many international assets Sberbank owns and how they'll be able to access them now that they can't use SWIFT. When people are worried about a bank's stability, they often hurry to withdraw their money before it's too late. If all the people try to withdraw their money at once, the bank may not have enough money to pay them. And that's exactly what's happening to Sberbank right now. Sberbank also has European subsidiaries, which operate in Austria, Germany, Hungary, and a few other Central and Eastern European nations. It has nearly 800,000 consumers and assets worth 13 billion euros. Customers of Sberbank Europe began aggressively withdrawing their funds last month, fearing that Western sanctions might freeze them. The European Central Bank issued a report on Friday 28th, stating that Sberbank Europe and its subsidiaries are either failing or are soon to fail. The ECB said Sberbank Europe AG and its subsidiaries experienced significant deposit outflows. As a result of the reputational impact of geopolitical tensions, this led to deterioration of its liquidity position, and there are no available measures with a realistic chance of restoring this position at a group level and in each of its subsidiaries within the banking union. The ECB took control of Sberbank Europe and is now closing down Sberbank's operations and selling off its assets. The bank's failure was triggered by fear of all the depositors. They feared the future impact of sanctions, which caused a run on the bank. When a bank is collapsing and actively in the process of liquidation, it's easy to understand why the share price is down 97%. It's worth noting that Sberbank's European subsidiary only had 13 billion in assets, or roughly only 3% of Sberbank's total assets. The vast majority of Sberbank's business is in Russia, so as long as there isn't a bank run within the country, Sberbank has a strong chance of surviving. Long queues have been witnessed at Russian ATMs and bank offices, although Russian regulators have yet to make any statements concerning Sberbank's financial situation. Sberbank has stated that they have seen a sizable number of outflows in a short period of time. If Russia's invasion of Ukraine continues, Sberbank may be forced to declare bankruptcy. If this occurs, it will be a catastrophic disaster for Russia, and the government may attempt to save them. However, in order to do so, they may need to print hundreds of billions or even trillions of new rubles, putting even more pressure on the currency's value and risk sending the country into an inflationary spiral. A failure of Sberbank would be disastrous for the Russian economy, as tens of thousands of businesses, large and small, rely on it to borrow money and process transactions. They will be unable to raise funds without Sberbank and will be compelled to reduce their activities and lay off employees. When Lehman Brothers went bankrupt in 2007, it threw the United States and the rest of the world into the worst economic recession since the Great Depression. Lehman Brothers has $600 billion in assets, which was just around 4% of America's yearly GDP. Sberbank currently has $500 billion in assets, which is slightly less in absolute terms, but is equivalent to 30% of Russia's annual GDP. As a result, Sberbank is far more globally relevant than Lehman Brothers. Russia will face a shrinking economy while it is on a wartime footing. Of course, the company hasn't declared bankruptcy yet, so this is all speculation. But with the stock price down 97%, it's hard to ignore. Do you think Sberbank's failure will lead to a global recession? Let us know in the comments. And if you've learned something new from this, click the subscribe button and hit the bell icon to be the first to see our new videos. I make deep dives like this every week where I uncover the secrets of money and business.